Hi, listeners. It's Stephanie Ricca here with a quick note before we get started. Hotel News Now is changing its name to CoStar News, so our podcast name will change too in the coming weeks. Same smart reporting, same hosts, the great guests you've come to expect from us, just a new name that reflects our overall branding change from Hotel News Now to CoStar News. You don't have to do a thing, just keep listening and we'll take care of the rest. Thanks for sticking with us. Now let's get into today's episode. Hello, and welcome to another episode of Tell Me More, a hospitality data podcast. I'm Stephanie Ricca with CoStar News, as always, here with STR's Isaac Collazo and CoStar's Jan Freitag. Hi, guys.
Good morning.
Good morning, Stephanie.
Now, if it feels like you just heard from us, you did. We released a bonus episode from the NYU IHIF conference earlier this month where we unpacked the latest U.S. hotels forecast. So take a listen if you missed that one. But in the meantime, guys, I want you to ask me where I've been this week.
Where have you been? Tell me more.
There, that's it. So I was in New Orleans this week at the National Association of Real Estate Editors Conference, an annual journalism awards ceremony. And I am happy to tell you that this podcast, Tell Me More, a hospitality data podcast, took home the gold best real estate podcast from amid a big pool of real estate focused podcasts from all kinds of publications. Guys, our little thing here won.
That's awesome.
Wow. That's
Congratulations.
Awesome.
Congratulations.
And to you, Isaac. And to me. Congratulations
And
to
to
us.
you.
Man,
To
gold
all
medal.
of us, right? This is
We will raise our coffee cup this
Yes.
morning and to our production team, which is my CoStar News Hotels team that makes all the magic happen. But really, it is all because of this great conversation and support we get from listeners. So, hey, that's good.
so do
The
we
big
get
question
medals?
is, did you actually get a medal? Exactly.
Yeah,
There
definitely.
is no medal. It
Oh.
is
Okay.
a certificate, but it's a gold medal in our hearts.
Can
Gold
we get
medal
little
in our
wallet
hearts.
size ones so we can show people?
That is a great idea. I'm going to make sure that that happens so that you can pull it out, and as you're showing pictures of your kids and your vacation, you can say, here's a picture of my gold medal certificate for this podcast. And by but I mean however, you know that here at Tell Me More, we do not rest on our laurels. We don't take the summer off. Hotels don't close, so neither do we. Let's get into it with Isaac and the May data. Now, listeners, Isaac has been texting Jan and I all week with predictions about how May would shake out. So just tell us, Isaac.
Well, it shook out as we thought it would, but we've entered a really slow growth environment. There's no doubt about that. So definitely slow growth. RevPAR for the month was up, for the US, was up 0.1%. And really, an extra Saturday was what made it positive. Without that extra Saturday this year, last year there was one less Saturday, this year's one extra Saturday, it would have been flat at 0. So that extra Saturday took us to the 0.1. A year ago, we were at 4.4%. So just to give you some context, and if there's any good news about RevPAR for the month is that it's up from last month. Because remember, last month, April was down. So yeah, it was really a difficult month.
Isaac, you're fishing. That is
I'm fishing.
really, if that's your good news, 0.1%
That's
is
my
better
good
than
news.
last
No,
year,
I actually
last
have
month.
some. I
Man,
have some
But it
good
was
news. I actually
positive.
have a little bit of a good news. So the good news is that the number of rooms sold in May was the highest since 2019. So that's true. I mean, we
that
sold
counts
more rooms.
for sure.
That's real. Overall, the industry sold 3.7 million rooms each night versus 3.6 million a month ago. So again, that's a positive piece. The other somewhat positive piece, especially for developers out there, is the increase in supply was the highest since August of 2022. And again, it's very low numbers, right? Supply now has increased year over year at 0.8% in May. A month ago, 0.7, but that is the highest we've seen since, again, August 2022. But given that supply now is kind of eking out demand, occupancy fell, right? So
Ugh.
occupancy was down 0.4. It's at 65.3%. And then ADR also was a disappointment. So the only positive was the room sold. ADR only grew 0.8%. And that's down from the previous month. So now we were talking that, we saw that RevPAR was higher, or yeah, that was better than April, but it was actually because of the demand side, because ADR actually went backwards at 0.8, not backwards in negative, but backwards in the growth rate. That means that real ADR for the month was down 2.5%. And by real, as you recall, that means we adjust for inflation. So that's also not good because we know that all costs are rising. So that means margins remain under pressure. Year to date, RevPAR is up 1.2%. That's also not a great story because a month ago it was up 1.6% year to date. Real RevPAR is now down 7.9% compared to 2019. Sold rooms are still positive at 0.3. And like what we saw in May, it's still the highest absolute number of rooms sold since May year to date of 2019. And again, a lot of that for the year to date came early in the year. As you remember, January and February see some strong growth. Available rooms on a year-to-date basis up 0.7, but overall occupancy is down 0.2 at 60.9%, and that's down 3.2 points from 2019. ADR is at 1.6%, but recall inflation is over 2%, so that means real ADR versus 2019 is down minus 3.1%. So again, a very slow growth, soft month. The only positive being that we are selling rooms. And again, we remember Memorial Day. We talked about that. Memorial Day was a normal Memorial Day. We actually sold a little bit more rooms this Memorial Day weekend than a year ago. So we thought that was going to be a good omen for the rest of the summer, but we'll talk about that a little bit later in this podcast. Just give quick global, just get some more numbers. Solid growth. Global has not seen a real issue at this point. RevPAR is up 4.7%, which is exactly the same as it was in April. Sold rooms are up at 1.6. That's a record high. It's 11% higher than it was in 2019. And so that's, really strong growth out there. Available rooms up 1.1%, but that's a 50-month low. So like what we've seen in the U.S., so it's kind of going counterbalance to the U.S., where U.S. is now ramping slowly up. We're seeing the opposite in global, and then occupancy is at 67.4. That's positive. ADR was also positive at 4.1%. Putting it all together, year to date, globally, RevPAR is up 4.4%, and that's almost exactly what it was this time last year. So
and that includes U.S., Isaac?
That includes U.S.
That final roll-up? Okay.
Yeah, that final roll-up includes U.S. And again, it's over pretty good. What we're seeing, some of the countries, looking at Latin America, that's one of the higher ones in terms of year to date. It was up 21.7%. Japan is up 20.5%, all on ADR, both of those on ADR. Middle East, Africa also seeing really good gains, but also via ADR. But they're also seeing demand gains. So I thought that's important too. So it's not only because you worry, is it inflation, is it currency exchange, is something that we're missing? But no, we're also seeing the demand side. And then on the flip side, China, Caribbean, UK, and France all saw May RevPAR fall by 1% or more. And a lot of that was on falling ADR, except for China, where both ADR and demand fell. So that's kind of a quick wrap up. And I might have said that when I was talking about Latin America, Japan, and MEA, that it was year to date. I'm sorry, it's only for the month of May, that 21.7. But they're seeing about the same thing year to date as well.
Well, I like that you can pick out some of those highlights. I can tell Jan is itching to add something. Jan?
I mean, I appreciate saying for the US, this is a slow growth environment. Man, it's bumpy out there in the night, people. 0.1%. And then, really the concerning number to me is the 0.8% ADR growth, right? I mean, that there really is no pricing power that we report on. You will probably talk about the bifurcation part a little later on. The upper end still continues to do quite well, but it's sort of bleeding into the other classes. We used to have luxury, upper upscale with solid results, and now it's basically just luxury for all intents and purposes. and the economy sector is not doing well. So if you just sort of take a step back and just look at this month in sort of isolations, like, wow, we had hoped, that this summer would be with little visibility, but still would turn positive because the American leisure traveler sits on their hands and then with a very short booking window makes the bookings. I hope that's true, but
Yeah, yeah. I mean,
where we look in May, I'm a little more worried now.
yeah, I'm with you, Jan. I'm a little bit more worried. And I wonder, you and I have been talking, is it, what we do know about the industry since the end of the pandemic is that groups have not returned to 100%, right? We know that. And we know, and we have a good idea that business transient is not 100%. And I'm wondering what we're seeing is that we don't have that base business. And because of that, and then we have this economic pressure coming on the lower end as well as across the board, then now we're really seeing that all come together. It's like, hey, that base business isn't there. So now it's really fluctuating on that leisure traveler. And we've had lots of noise. And yeah, it's gonna, I think it's gonna be bumpy. I think that's the best word to use. It's gonna be a very bumpy summer.
Yeah, we talked about the term uncertainty, of course, ad nauseum at every industry conference, but
Ding, ding, ding.
the macroeconomic and macro political uncertainty of what's going on. Oh, there's a 2-week reprieve and we're not doing anything, but 2 weeks from now, it's very, very hard to budget, to schedule anything if you only think in 2 weeks or 1 month or 1 quarter increments. And I think that then makes a lot of corporate transient travelers and a lot of corporations sort of, sit on their hands as well, just as the leisure traveler.
Correct.
I want to point listeners to another podcast that we dropped earlier this week, and I'll put a note in the story and in the show notes, where I talked with Deloitte's Maggie Rauch about this very thing, about summer travel trends for 2025. And what they're predicting absolutely matches along the lines of what you all are telling me we saw in June in terms of that uncertainty bump, that hit in March, April. We know what that was, and what it did, according to Deloitte's results, was make those survey respondents pull back a little bit in their expectations for 2025 summer travel, even just a few months out. So all of those things about lower spend, shorter booking window were predicted in that survey as well.
I give them huge credit for having a survey out in the field. And then when the macro changed and Liberation Day with the tariff announcement, then they went back into the field and redid their survey. That is not easy. That is not cheap. So huge shout out to them for doing that, because it gives us a really good understanding how American consumer sentiment changed literally, I don't want to say overnight, but over like a 2-3 week period.
A 2-week period. Yeah, exactly. And
super interesting.
It showed the drop of people saying, we expected we would be spending X, and now 2 weeks later we think it will be X minus Y. So interesting summer ahead indeed. Now we are moving into Jan's topic of the month, which maybe, I hope, might be a tiny bit more optimistic. Jan's going to talk about hotel transactions. We're not quite at the end of the second quarter, but is it just me, or does it feel like we're seeing a few more of those 100 million plus sales, along with a couple really landmark ones? Jan?
Yeah, I think what you're seeing and what your team and you are reporting on is sort of this, okay, we're not all systems go, but there's certainly a lot of activity, right? So we are reporting this a couple of days before the quarter ends. In the CoStar platform, we count roughly 4 billion or so in hotel asset transactions for Q2, which basically is roughly 30% or so below Q2 of last year, where it was roughly 6 billion or so. Now, it turns out that 4 billion number is going to get revised upward, likely, just like last first quarter data was a little bit lower. Now it stands at 4 billion. Right now we have that, but I think it's going to get revised upward a little bit. There were a couple of marquee sales that sort of made the news that you reported on. That's probably worth just running back through, just to give our listeners a sense of who's trading and what's trading. Of course, always the caveat that the majority of deals are under, 15, under $20 million. It's Jan selling his Jan Inn 3.5 star in the middle of Tennessee to Isaac, who always wanted to run a hotel. And, maybe there's a broker involved, maybe not, maybe they're related, and there are a lot of these deals for limited service, sometimes exterior corridor type properties that really drive that $4 billion. So we're not going to go through all of those sales, but a couple of them that made the news, obviously, number one was the JW Marriott Desert Ridge, $865 million. Trinity sold to Ryman. Ryman is on the record with one of the investment bankers basically having a shopping list and saying, well, if any of these 6 properties ever come online, or ever come up for sale, we'll be interested buyers. So that's just an interesting, I think, strategy. A lot of them are on the JW side, right? There are only so many Gaylord hotels out there, and Ryman obviously owns most of them, and they're now looking to expand into other high-end meeting properties. So the JW Desert Ridge certainly met that description. Trinity bought it for $600 million plus and put in $100 million plus. So I think everybody sort of did okay in that. When I sort the sales per key, one property stands out. The Silver Sands Beach Resort in Key Biscayne sold for $3 million a key. And I'm like, I don't even know where that is or what that is. And then you dig into the property, and the reality is it's 56 rooms, and it's in between huge condo towers. And it was the last parcel on that specific beach piece that an investor bought. They're going to nuke it, and they're going to put in 56 high-end condos, for $5, $6, $10 million a residency. So the price per key here doesn't really matter. It was just an interesting sort of outlier when we look at it.
Interesting math problem.
Yeah,
right?
Exactly.
So yeah, when do you move to this place?
Yeah, exactly. I
After selling the hotel, the Jan Inn to Isaac for $25 million.
Yeah, Isaac, exactly. I got a bridge in Mississippi for you too. Blackstone did a deal in New York, and a lot of people were like, oh, is this the Renaissance of New York City if Blackstone moves in? When you talk to some of their senior people, when you listen to them at some conferences, they're like, nope, this just made a lot of sense for us. The price per key was right. Was a total of $175 million for the Kimpton Hotel Eventi. Call that $600,000 or so a key, and they just were like, nope, in this location, in this town, with no short-term rentals and still 16,000 rooms out of commission to house the homeless and migrants, this makes sense for us. We're always opportunistic, and so they were. One hotel that made the news that we all know, called the Stanley Hotel in Estes Park, Colorado, best known because the movie The Shining was taped there a long, long time ago, obviously. Here's, what is it? Here's Jackie? Here's Jimmy? No, here's, what's the tagline?
Here's Johnny.
Johnny, exactly. So that hotel traded, but it was really a trade from the current owner who put it into a trust. And so that hotel now has a little bit more money and can be developed a little bit further on. So those are just a couple of the highlights. Hotel Bolerado, just quick shout out. AJ Capital here based in Nashville bought it. They're going to make it a graduate hotel. AJ Capital sold the graduate chain to Hilton, but maintained their real estate assets. And so they're leaning into that real estate ownership group, and now bought the Hotel Bolerado. So there are a couple of high-level trades that make the news, but the reality is a lot of the trades are always under the radar, limited service type properties that continue to happen. So what's the takeaway from all the stuff I just said? Number one, yes, for high-end trophy properties, there is still some money out there. They're few and far between. Number two, we're not seeing a lot of transactions. And when we talk to the major brokers at NYU, at the Alice conference, they said, hey, we think that transaction volume will increase by around 20% this year. When you talk to them at NYU, they're saying, we're probably going to be flat with last year. And I think that is sort of the tenor. Yes, there's activity, but brokers always live for next quarter. when you talk to them, they're saying, oh, but next quarter is going to be better. So we're very curious to see if Q3 is indeed going to be materially different. I don't think interest rates are going to move. So I don't think transaction volume is going to bump up materially. There's always something happening. This is a very active industry, and $4 billion in asset sales, certainly not nothing. But it's not this huge run-up that a lot of players had hoped for at the beginning of the year. I think slow and steady, or what did Isaac say? Slow growth? Slow growth environment on the RevPAR side is certainly mirrored in the slow growth environment in the trade side.
And I'm just not surprised by anything you just said. It makes perfect sense, right? We're seeing that just in the performance numbers. We're seeing it even in conversion. So forget even about just turnover in terms of property sales. Conversions aren't moving a lot. It's just a very slow, steady growth environment. There's no other way to say it. I mean, I think it's not surprising.
A lot of the owners that we heard talking at the NYU conference were mentioning that value of irreplaceable assets, and so that's when it's always interesting to see these big, hotels that fit into that category go. And I remember some of those guys on that panel just talking very frankly about, hey, if we don't need to sell it right now, if it is irreplaceable, we'll hang on for a little bit. So more of the same, it sounds like.
And what feeds into that, Stephanie, is that the CMBS, the commercial mortgage-backed security markets, is wide open, and refinancing is very easy. And almost every equity house is now also a debt house.
It's happening as we speak, right?
Everybody wants to be a lender. So if you don't have to sell, chances are you can refinance.
All right, now it is time for Isaac's topic of the month, and we are going to dive deeper into demand. That has been the piece that we've all had our eyes on first quarter and into the second quarter. What is happening with demand, that cornerstone of industry performance? Isaac, tell us.
And to remind us, I look at demand because nothing happens without people staying in a room, right?
Right.
And so, because a lot of other folks just want to look at the RevPAR number, which is important, top line profitability, got it. But you got to watch the demand side. So I started looking at the May demand even before June data started coming into play. And I must preface this in saying, I'm not trying to explain away the issues that we're facing economically. I'm just trying to get some context and trying to see if I can see a pattern and how I can use that to understand what's happening in June and use that to project for the rest of the summer. So that's what I'm trying to do. I'm not trying to explain away anything. So first and foremost, as I said, May was the second highest demand May in history, right? Just behind 2019. So the industry sold 103,000 more rooms this May than it did in last year. And what was interesting about it is we broke down hotels into comp, non-comp, new, all that stuff, almost like what we do in the brand world, right? So what I noticed is that closed hotels that were open in 2024 of May, but no longer open in 2025, they took away from our industry 1.1 million rooms. So that's one part, okay? They took it away. New hotels that opened, they weren't open in May of 2024, but opened in May 2025, contributed 1.9 million rooms. And you go, well, if you do the math, then demand should have been much higher, right? But it isn't. That's because comparable hotels, those hotels that were open both years, they lost 700,000 room nights. So that's when I started really digging into that. They were down on a percentage basis, 0.6%, right? So we know the industry was up in May, 0.1. These comparable units, which is about 63,000 hotels, so it's a lot of hotels, were down 0.6. When you look into it and start breaking it down, the majority or the largest percentage loss in terms of rooms was economy segment, something that Jan mentioned. They were down 2.4% year over year, comparable economy hotels. What was also surprising to me, upper mid-scale was down 0.7, and then upper upscale independent hotels were down 0.6 respectively. And so what's surprising is upper mid-scale has always been our road warrior hotels, right? There's a lot of them. They're one of the largest segments in the industry, but that really is our gauge of, the strength of the business traveler, but they're down. So that's telling us something's there. And then they also get a fair amount of leisure travel because they tend to be ubiquitous across the US. Upper upscale is also very surprising to me because, again, that is our group hotels. But that goes back to the comments we made earlier that both business and group are not 100% back. Even though group has still been doing very well, we're still seeing pressure in upper upscale. So then I started digging further. What was really interesting, and this is going to have ramifications for June, is Houston topped the list for the most hotels with declining rooms, especially in the economy sector. And you go, what? How can that be? Why did economy hotels in Houston fall? A year ago.
In June or May?
In May, but this will apply to June as well.
Okay.
It's going to go both. So this was, Houston fell because a year ago we had flooding in Houston. If you remember something called the derecho, right? So they had severe flooding. So a lot of these economy hotels saw a huge lift from that, from both displacement as well as remediation efforts, et cetera. So that's something that you got to keep in mind when we're looking at June data, that Texas, specifically Houston and parts of East Texas, were impacted a year ago. And now, so they saw a rise in demand, and now we're seeing the opposite. We're seeing demand come back to normal. That's an important piece. Another piece that was interesting for me is like the top loser for upper mid-scale in May was El Paso. From a percentage, it was like, I don't know. I have to look into that. It was a very interesting one to me. I haven't done more work than saying, identifying that. And then the other one I thought we have to see and keep tabs on is Las Vegas. Las Vegas has seen a pretty good decrease. So they're driving the decline in independence because a lot of the big casino hotels are considered independent, right? And they are seeing downward pressure in their demand side as well as on ADR. But kind of put in perspective, we looked at now switching to June. If you look at June year to date, as of the 14th of June, 73% of the absolute demand loss is from two markets, Houston and Las Vegas. So as you think about June, as you keep thinking about, it's like, what is going on with the industry? Why are we actually, let me fix that, it's 53%. I knew there was a 3, but it's 53%. I had to check my spreadsheet. It's just, Las Vegas is having a difficult time. I think this is where we can look at saying, yes, the loss of international travelers, the change in conference schedules is holding back Las Vegas at this point. And that is the largest market in the country, and it does have an impact on our total industry. So as you look at the industry results, it's going to be even more important to really dissect it and break it apart, because we're so used to looking at the industry, right? Just the industry. I always go over what the industry is doing, but you're going to have to really look at it almost by regions of the country and be aware of, hey, there's pockets. Houston's going to be down. There's a reason for that. And then we'll see if we can figure out, where are the leisure impacts. Just as a side note, this past week, I was looking at just the data for true leisure destinations like Orlando. Orlando was up. So it's just going to be a very bumpy, going back to what Jan said, a very bumpy summer. Some markets are going to do well. Chicago's doing well. Orlando's doing well. Others are not doing so well.
I think it's very interesting to think about Las Vegas as emblematic of both international inbound and group, as sort of that indicator market or indicator city of what the impacts of not full recovery in those two segments have.
And leisure, right? And
leisure, so all of it, right? But those two in particular that he mentioned, I thought, oh, that's right.
What's really interesting is that it's a market that should have been up because we lost the Mirage, right? Because that's now being transformed to the Hard Rock, and the Tropicana, which is probably not a big demand driver, but still was a demand driver of some sort. And those are gone, yet we're still seeing that impact. And I thought that was really interesting to me. So, and again, I would look at my markets. I mean, that's what I'm doing. I'm just looking at it. I'm looking at the data right now. I look at everything. So I try to really figure it out, like what is driving this decline in comparable units and things. So it's a matter of just really digging deep and just digging and digging and digging. And sometimes you go down rabbit holes. And so I probably go down
Sure.
more rabbit holes than I should.
No, I think this is exactly, I think what we need is the understanding of what happened exactly a year ago. Why was last year up? Why was last year down? I think we keep looking at just what happened this year, but with the weather events, we have to continually have a notepad. Like I know you have a whiteboard behind you, and you write down these weather events because we always have to go back to the drawing board and say, okay, so what happened in that week a year ago? Was there weather? Was there, was there flooding? Was it too hot? Was it too cold? And what was the impact then, therefore, on people being displaced? And that then has an impact on our data. I think we're going to only do more of that work.
And I remind everyone that especially fourth quarter, you're going to see the reversal from those hurricane markets a year ago, the 13 markets that we identified, and that could also be impactful. And just a reminder that, they provided a lot of lift to demand in that fourth and first quarter time period. So it's important to keep that in mind.
Yeah, I don't wish the hurricane on anybody, but the weather is getting more weathery, it's getting more extreme. And I do wonder what a hurricane season looks like this year, and yeah, will we have individual markets that will have a tough comp, but we will see other markets that see displacement. We're going to continue to obviously watch that. The impact on the hotel industry is immediate.
It seems like it requires a recalculation every year of what those affected markets might be. And, based on whether it's a smaller or more localized weather impact versus the larger regional one that we may have been used to seeing in the last 10 years or so. Every year, those markets seem to change a little bit. I mentioned I was in New Orleans early this week, and I was talking to my Uber driver who'd been there during Katrina, and we were mentioning how, we were having conversations with a lot of younger people who didn't necessarily have the Katrina impact in their immediate experience. And she was saying that she still drives through many, many areas of New Orleans that never recovered from Katrina. And whether those were displaced houses or homes in any form, and hotels, that there are still, she said, you would be surprised to know how many pockets of the city still haven't recovered from it. So that weather impact is one that we can't minimize, right?
And again, I keep thinking of, and I couldn't figure out how to prove all this, but without that base business, right? Without that business travel at 100% like it was and grew, because we started. So what I fear now, and I do have fears every once in a while, I fear that if we are going to a downturn, we weren't at 100%. We're starting at a lower base, essentially, right? Even though we did see a record May, or second highest May, but there is not going to be the cushion that we've had in the past to kind of absorb these fluctuations. At least that's what I'm trying to think through my head, but I don't know how to actually prove that to me, to see that's a true statement or not.
Yeah, but just to add to that, June month to date through the 14th, RevPAR down 2.3%, occupancy down 2.7%, and ADR growth is, you have to squint, and it's 0 point something, and it's 0.4%, which is called that flat for all intents and purposes.
And again, not trying to explain it away and make it optimistic, but again, we have to keep peeling that back and look at what markets are driving that. So basically, the message is not everyone is going to have a bumpy summer. Some people might have a decent summer, but there's going to be a fair number, especially when Texas, we've been looking at Texas, again, a lot of that Houston, but other parts of Texas, it's going to be rough. And that is a big hotel state. There's lots of hotels. So.
But hey, hotels are a local business, right?
Right.
Location, street corner business, all of those things.
Yeah, absolutely. They benefit, and they're there to help, right? We don't want to minimize they have a huge impact on the community. They have the generators, they have the food, they have the shelter. When things go sideways, the first place you want to go to is to a hotel.
This episode is drawing to a close, and we all know what that means. It is time for Jan and Isaac to give us their little illustration, their song, their memory, their whatever that reminds them of how the hotel performance right now is having an impact on them, on overall growth, on whatever. You know what it is. It's the metaphor. Jan, hotel industry right now, approaching the dog days of summer. What is it making you think of?
One word, blackberries. So my wife
Oh,
has a green thumb. She is the gardener in our family. I have nothing to do with this, but she started planting blackberries. And they turn from green to red to black, and she harvested some and handed them to me, and I bit into it, and oh my God, it was so sour. Like they looked fine on the outside, but it was so
Oh,
sour. And she's like, "Well, maybe they're not quite there yet." So to me, this is sort of like the hotel industry. We look at it right now. It's like, man, that's a little sour. But let's just let it germinate in the sun a little bit longer, and let's hope that it all turns out sweet in the end.
oh, I love it. And we can bake it into a pie. That is perfect. So give them a little bit more time in the sun.
Exactly.
oh my
I
God,
love it.
you're turning optimistic on me.
See, there's always room for opportunity. There's always growth opportunities. Isaac, what do you got?
Isaac Claus was playing the role of Jan Freitag in this episode of Tell Me More. So I am feeling stressed out. So my
Oh
song today,
no.
yeah, my song is from 21 Pilots called Stressed Out. And it's because it is what I feel. Wish we could turn back time to the good old days when our mama would sing us to sleep, but now we're stressed out. So it is, everything I've been thinking about over the last several months. Yes, knowing that the economic environment was changing, but I still thought, the industry still had the ability, and that summer was going to be better than what I've seen so far. And again, even the Memorial Day said, hey, we sold more rooms this Memorial Day than in 2024. That's a sign saying, hey, people are still going to travel. But since then, it's not been great. As Jan said, we've seen demand down, we've seen RevPAR down, we're seeing ADR growth at just minimal levels. So yeah, it's stressing me out because we just released the forecast, and I'm kind of the guy behind the forecasting here. So yeah, we got to rethink all this. So that's why I'm stressed out. And so I think I'm eating more than I should.
Oh
Probably,
no.
yeah, I need to, yeah, we got to rethink all this. It's interesting, even though, as I just said in our previous segment, it could be specific markets, but still, it's something that we knew of, but we probably didn't take into account of to a greater extent. So it's not like we didn't know about the derecho, but we probably didn't take into account how big of impact that was going to be.
Go
If
ahead,
you
Jan.
want to know what Isaac Colazo thinks about, join us in Nashville, Tennessee for the Hotel Data Conference, where we will release the latest STR forecast.
Yeah,
Thank you.
we'll be working on that soon.
I didn't even tell them to say that. I have got these guys trained well. Now, Isaac, I do want to offer you a little bit of a musical counterpoint, okay? Because in the beginning, at the top of this episode, and you were talking about, what brought May positive was that extra Saturday night. I thought, all right, Isaac, you know what? You may be feeling stressed out, but just let me remind you of the words of Sir Elton John: Saturday night's all right for fighting.
Yeah, and we're gonna get to fight. We're gonna have to fight because
Let's
it's
fight.
Saturday, Saturday,
Saturday.
Saturday,
Yes,
Saturday.
yes, it's just gonna be. I agree, but it's just yeah, it's we spend more time on our computers now. One day, maybe next year, we can have a quiet year where, hey, Jan, there's nothing really to talk about. Industry's great. Life is
Oh,
good.
no,
No,
we
no,
will
no,
find a
no.
way. Listeners, we've got to cheer these guys up. Come on, joy. Let's find them on their LinkedIn pages and send them a little bit of cheer. All right, because that does it for this episode. We will see you again in July. And if you are lucky enough to hold a ticket to the 17th Hotel Data Conference in Nashville in early August, you will see this show on the road. That's right. We're doing a live episode of Tell Me More once again from the event. We are very close to sell out. So make sure you go to hoteldataconference.com CoStar.com to register. And we promise these two will be in a good mood because we've got a lot of fun up our sleeves for that live episode. And as usual, find all of our news at CoStar.com/hotel news. You heard at the top of this episode that we're in the process of changing our name from Hotel News Now to CoStar News as we join in with our fam on that side of the company. You, as listeners and subscribers to this podcast, do not need to do anything to keep receiving it or to keep seeing our news. An insider tip, you can still type in www.hotelnewsnow.com to find our news as well. Thanks, guys. See you next time.
Going for gold
Thanks,
again.
Steph.
Thank you.
Hi, I'm Davon Reed.
I'm Omari Head.
And I'm Chris Henry.
We're the hosts of the Next Gen in Lodging podcast. It's a monthly show in which we interview a new generation of hoteliers to get their insights into a variety of disciplines and topics, from finance to food and beverage and hotel operations. Listen to us on Spotify, Google, Apple Podcasts, or wherever you get your podcasts.
This episode of Tell Me More, a Hospitality Data Podcast was recorded on June 20 by me, Stephanie Ricca, and edited by Rachel Daub. For more hotel news, podcasts, video interviews, and more, visit CoStar.com/hotel news. Thanks for listening.